The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the show, folks. And here we are broadcasting from 100 South Broad Street, Philadelphia, Pennsylvania, the offices of Duke & Duke. Folks, we're going to take a look here at the DAX this morning. As you can see, we had a really strong rally right from the beginning this morning in the DAX. But what's important, I believe, is if we take a look at this daily chart that goes, way back here, back into June, you'll notice that we've been up here for 6 days now. Today's actually the 7th day where we've been had all of these, things are just really tight. Much like we had when the just a minute, boys and girls, the words will come in a second. Just like we had in the S&P 500 back in July. If you remember, it was in that real tight trading band that never seen before. It broke out to the upside and then started to have the correction. We'll walk through the futures today in the S&P because we're at some really interesting spots here as we come in this morning. It'll be really technically a lot of fun to watch how this unfolds. I think the first thing that we're going to do after looking at the DAX is sort of walk through, what happened here with these futures. Let's take a look at where they were Sunday night. This is the S&P 500. We'll bring it up and let you take a look at it. You'll see that we had a beautiful ABCD pattern up there at the 2504 level. Started to sell off, and we'll walk through that just to give you an idea of what happened. And so we'll be able to just go through it. Now, here's where we were. Let me get this up here so we can see it. Just post it for a second here. This will be the E-mini S&P up through early this morning. You'll notice the high that we made there at 2504. That was on Sunday night. And then you'll notice that the market broke down sharply. Look at it, folks. It made a perfect A, B, C, D pattern right to the downside. It tested it twice mid-morning and then had a pretty good rally. And what we're doing right now is we are banging up against that 61% retracement level at 24.99. We could get all the way up to 25.02. Well, we could go to 25.10, I suppose. But there should be some resistance between 24.99 and 25.02 is the way it looks like, from a technical basis. It's just a way of looking at it, folks, but frankly, it's a pretty good way. Let's take a look at the NASDAQ because that's the one that has been, let's just do it first. We'll do the NASDAQ. Well, since I've got this one up, here's the E-mini E-mini Dow Jones on Sunday night. You'll notice it made a perfect 61% retracement. And then if we take a look at the NASDAQ, and if I can get that up here, I will bring it. Here we go. Here's the NASDAQ on Sunday night, and then you'll be able to see because the NASDAQ has been the leader, folks. The NASDAQ topped way back on the 18th of August. We think it's a top, but one never knows. But you'll notice that we did make a 61% retracement on the NASDAQ on Sunday night. But the real key to all of this, from a perspective of looking at it from a technical basis, is where we're standing, where we're sitting right now. And that is, 1 second here, this is going to be the important one. If I can get the chart up, and believe me, I've had it here. It's just a $64 question is whether I can find the little puppy or not. And there we go again. Oh, shucks. Oh, dear. This is important, too. I think this is it. Yep, I found it. Yep. Hold on 1 second here. Pull this up. You'll see here's the NASDAQ over the last 2 weeks. You'll see the Sunday night rally. You'll see the Gartley pattern that I have there marked in green. You notice that that was a perfect 382 retracement off of the high of August 18th. What did that lead to? If you'll notice the big ABCD pattern starting on the 18th, went exactly to the low yesterday in the NASDAQ at the 58.45, and now the NASDAQ is rallying, and if it's technically correct, these rallies have been just about equal, so the NASDAQ should not get much higher than 59.10. That would, I don't know where it's trading right now, I haven't checked it recently, but at 59.10, that will be a real interesting spot because you're banging up against those old lows. You're making an equal retracement that we've had before. And the third thing is we're making a 38% retracement again from a high. So those are the ones that look really interesting this morning, you know, from that perspective of technical analysis and pattern recognition. That's nothing to do with fundamentals or anything like that. It's just what we see from a technical chart standpoint, and that's what we think is pretty interesting. Now, there's another stock out here that I think we need to pay attention to because it's in the news all the time with all of its free advertising, and that is the Apple. And if you'll see right here in Apple, we had an ABCD structure forming yesterday. It was also a 1.618 expansion from the low on August 18th, right to the exact spot. And it also completed two ABCD patterns on the way down. This suggests that we should get a 382 rally up to the 155 level in Apple. Last I saw it was around 152, so at around 155, that should be just about it in Apple. So it's a $64 question if that's going to hold it or not, but it's certainly moving to the downside. Our good friend Arch Crawford was kind enough to forward on the chart of the new highs to new lows. If you'll give me 1 second, I'll put this up here, and you'll see that even though the market has made new highs in some of these things since August, you'll notice these sloping highs that we have ever since May. In other words, this is a number of new highs to new lows is not a very bullish picture, but you know the market still goes higher. But this is telling you that there's a fewer and fewer stocks are making new highs, which is usually not a good thing. And the highest level was way back in May of 2013, and so you know you're talking 4 years ago. So, but recently, since April of last year. May of last year, you see we've had these declining tops, which is telling you that there's distribution coming in the stock market, and that's what it's telling you is distribution, no more, no less. So pay attention to that. There's one other chart that we received from one of our listeners here at TFNN that is worthy of our attention, and that is a chart from. This is from I believe it is from. Let me see. It is from, actually, it's from Business Insider, as I recall. But we'll take a break and we'll talk about this when we get back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to show this chart from one of our TFNN listeners. It's a chart that shows the S&P 500. As you can see, that's the blue chart, and then the gold line is the cap ratio, in other words, price to earnings. And as you can see, we're up in an area that has been indicative of some pretty substantial highs going back to 1921. And then the big high, of course, was the dot-com bubble in 2000. So that's just all this is telling you that the market is oversold or overbought. That's basically, all that it's talking about. Oh, we got a caller today. This is good. We got a call from John in Philadelphia. John, how are you?
I am very well. Thanks for taking the call, sir. I once again appreciate all you do for us in your TFNN audience. I wanted to ask you about the euro, please.
Sure.
You and I both know we each have individual trading styles, and our strategies might differ, though the tactics oftentimes line up the same. So I wanted to ask if you could update us on the euro currency right in here. And the reason being, I recall you were looking for a pattern to sell mid last week. We got it on the FOMC day just before the announcement from Chairperson Yellen, and then we've had a nice decline. So the shorts was the right idea, and now we've declined. What I'm wondering is, now that the euro has declined from close to 121 down to just under 118, and it just met literally in the past hour an exact AB equals CD target on the 4-hour chart. My question is, as you see it, is this a low-risk buy right in here? Yeah, that's the question.
Yeah, John, I posted the chart of the hourly euro that we were looking at last week. As you can see, it was a head and shoulders pattern. It was coming right into the FOMC meeting right at the time of a 78% retracement. In fact, we've been watching this for several days here in the den, and we hit it, spot on. Then the market started to sell off, and as you mentioned, we've just come down and completed a ABCD structure to the downside. Now, the $64 question, and this is always something that we have to ask ourselves, is that the actual number on that 78% level comes in at 117.60. And so far, our low has been, let me double check it here now, 117.80. And let me see if we're still in that. We're trading at, 117.80 has still been the low. We're trading at 117.96 right now. So the difference between 117.80, 117.60 is 20 pips. John, I have to give the numbers the benefit of the doubt. I must wait for 117.60. That's really what I'm watching. You mentioned that ABCD structure. You're absolutely spot on in that. I'll put this up so the folks can see it. This is the 15-minute. And what we have below that is the 1.618 expansion. It's on the lower side of this. That's why you'll see it on the 60-minute much better than you do on the 15-minute. Let's put that number back here on the hourly chart on the euro. You'll see it much clearer. And I know we're trading right now is where we are, 117.93. And if you'll notice there, I'm looking at 117.60. The reason why I'm looking at that is because that's the exact 78% level on the downside. Now, my thinking, John, you can follow me here. If it made it exactly perfectly on the upside, I'm assuming that it's going to make it pretty close to that number on the downside. Now, if I don't do it here, and I get it, let's say I'm impatient, which I am a lot, I have to buy here at 117.93 and still set with maybe 33 pips, $330. Of heat in case the market does go down to 117.60. So my game plan is I'm waiting for 117.60. And that doesn't mean it's going to stop there. It just means that there's two ABCD patterns and a 78% level, just like we had on the upside. That's all it is. It's just a pattern. That's nothing more.
Yeah, no. Thank you for that detailed explanation. That answers my question precisely. Let me just ask a follow-up, not in regard to the euro right here, right today at 117.93, but more conceptually, as you are a pattern recognition trader using your Fibonacci expansion and contraction numbers, and you're looking at a great many things. I think you've mentioned in the past you look at 10 to 20 different markets that you just regularly assess day to day, week to week. If the number, if that 117.60 or within 10 pips, if that's not hit, is it just, your personal trading practice to just say, okay, that's fine, it didn't quite hit it, I'll ignore it, I'll move along and focus on other things and merely act only when the numbers line up real nicely? Is that kind of your style?
It's pretty close, John, but the one thing that I will do, because this is such a nice pattern and there is a nice ABCD there, and the trend is certainly up, isn't it? We have a really strong trend in the euro. So what I would do is go down to a 15-minute chart. Let's say that if the market rallies more than 60 pips, in other words, if we get above 60, if we get above 118.40, I'm assuming that I missed that low. That's what I would assume. And the reason for that is it's gone higher than one harmonic number, which is 40 pips in the euro. So I would look for a pullback of that 60 pip range, maybe backing off to maybe that would take you into about 118, I believe, and then I could buy it at 118 and stop it at 117.80. Only risk the 20 points there, and then retry it again if it gets down to 117.60. That way, I'm only risking 20 pips on one trade, and then I'll re-enter and try it again at 117.60. Does that make any sense?
No. Well, yes, makes perfect sense. And more to the point, you precisely answered the question I was asking. So thanks for sharing that thought process. That answers the question exactly. So thank you. I will look forward to your upcoming guest interview here, and merely ask in parting if you could kindly just address the gold 15 and 60-minute chart sometime before the close of your program today. I'd be much obliged if you have time.
John, I'm going to take care of the gold right after the break, but I just wanted to post the euro on the weekly because Steve Rhodes just came in with some really great information. This chart pretty much describes what Steve is talking about. that we've made a 50% retracement on the weekly basis in euro for 2014. So if we get below 117 in the euro, this puppy's over and we're heading down, big time. So this weekly chart could be the key. The fact that we did not get above 121, after the FOMC, and now we're several hundred points below it, actually 400 points below it. So you see that this could be a major top in here on the euro. So that we have to always keep that in mind too. That's why I'm constantly looking between an hourly and a 15-minute chart to find a low-risk entry point, because that's really what it's all about. Hey, thanks for calling in, John. And I'll cover gold right after the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to walk through this gold market here this morning. This is the chart that we're looking at as of last Friday, where we had that the harmonic number in gold, of course, is 34 times 2, because it's down quite a bit, would be 68. We came down $73 when we quickly made the 1291 level. From that level, we had a pretty good bounce. Now, as we said it last week's on Friday, we also put it in the newsletter. We spent a lot of time on that. Is if we look at the bear with me here just a second. I'm trying to walk through a scenario. But if you notice here on the XAU on the daily, on Friday, last Thursday, you'll notice that we hit a perfect 61% retracement and a perfect 50% retracement, and then gapped quite a bit higher. And it was higher yesterday also. This is telling us this is a pretty substantial bottom. That was also a 20-man line. As you can see here on the XAU, that was spot on right at that 84 level. So that's telling us, this is where the line in the sand has been drawn. Now, most of you folks don't trade the XAU. Let me answer the harmonic number question after I finish this gold thing here. But we'll take a look here at gold on the really short-term basis yesterday. I wanted to show this to you as of Sunday night because this is something that we were talking on the show yesterday, because we did have this little pullback, you'll see, yesterday right after the show was supposed to come on, but we didn't get on the show. And you'll notice that we had that ABCD, and then it exploded to the upside. And this is where we are now. And this is where I think it all comes together, at least from a technical perspective, that we'll be able to see it very, very easily. And here it is right here. We'll pull up this 4-hour chart. This way you get to see, 6 weeks of the action, and then you'll be able to see the whole thing where we came down 2 harmonic numbers, down to that area of the 1291. Look what happened yesterday, folks. We rallied exactly to a 382 retracement of the high that we made back on September 6th. Just draw this circle around that 382, because if you get above that, this puppy could be off to the races. But right now, all we've had is a bear market rally. We were expecting it to come at least $17, and we rallied $17. That's strange. That's 1/2 of a harmonic number. Now, Terry from, I believe he's from Colorado, asked a question about harmonic numbers. This is an idea from Jim Twentyman that goes way back into the 1970s when we worked together at Drexel Burnham. Jim did a lot of work at the Scientific Institute where Jerry Baumring and Don Mack, it was Don Mack's office, Jerry Baumring and some folks worked there. And Jimmy did a lot of work. And he also had you're from Charleston, that's a nice place. You also had a computer. I mean, we had bought a computer together Drexel bought it and we used it, but we would crunch a lot of numbers, and he would crunch these numbers to find out which swings were most prevalent in some of these things. And this was long before the S&P 500, but we did the work in treasury bonds. We did the work in euros. Actually, it was a Deutschmark at the time. And Deutschmark and the Swiss franc were the ones that were really big back in foreign exchange in those days. And then he also did it on gold. He did it on silver. We did it on soybeans and a few others. And he would notice that there was one particular swing that would come up more than others. Now, you can prove this to yourself if you'll just go into the 30-minute charts and find swings that have repeated over and over again. Right now, beans are running at 18 cents and 36 cents. Gold runs at $17 an ounce and $34 an ounce. That it's not going to be exactly 34. It might be, 35. It might be 37. But it's going to be very, very close. By the way, my good friend John Jameson is going to be doing a webinar with me in early October. We were working on it yesterday. Folks, you don't want to miss this. I mean, John's going to be doing the bulk of the work, but let me tell you something. This dude is one smart puppy. I met him 15 years ago. He's been over here to see me several times. I visited him in London a couple times, and he lives in the Isle of Man, and he's got some of the best information statistical. You don't want to miss this. If you ever believe in the opening price, you're going to have to pay attention to this webinar that's coming up, because he flat out proves that this thing really has a lot of applicability for trading. And we're going to be doing on Forex, and we're going to do a little series of them. There's going to be 3 of them, but he's a really smart fellow, and I think you're going to enjoy it a lot. So it's sort of like a guest webinar, and I'm going to be monitoring it. I'll be, adding some things to it, of course, but John's got some great stuff, and you don't want to miss that. That'll be sometime in October, and we'll determine that date a little bit later with the help of TFNN. They've approved this. They've looked at some of the stuff, so they're interested in looking at that. So I wanted to do one other thing from one of our other folks that we work with, and that is the folks from Beanpot Financial. These are the hockey players that I know. And this is what Jack Hughes has put together. This is what he looks at. This is the longer-term chart for gold. I'm just going to basically tell you what this is, folks. He uses a type of, what do they call it, market profile, similar to what John Logan does. I don't think they're that similar, but he looks for places where you can find support and resistance by looking at the open interest. And you'll notice here that he was looking for the high in gold way back there. And that blue arrow, if you watch those blue arrows, those are very interesting because that's where he's looking for areas of demand to come into the market. And that's what's happened on gold here over the last few days. We did get a really nice bounce of about $20, but that's just a shorter term version of what we're looking at. I'm going to try to have Jack as our guest here in a couple of weeks. He's pretty busy most of the time, but I think he'll give us some time to take a little bit of time to be looking at this gold, maybe on a longer term basis. Because if we can get above the 1325 level in gold now, that'll be a flat out breakout. And if it does it quickly, it's even more important because that means the thrust is there in the market, and that would be something that is quite important. Folks, there's two other markets that really deserve our attention today. One of them you probably don't trade very often. Let's just put it up. This is the heating oil. We're almost there. Just get this up here. You'll see in the heating oil, you're looking at this area here of right at the 188 level. We're trading at about 186 right now in the heating oil, so we're almost at that big ABCD pattern to the upside. We've cleared the $51 a barrel level in crude oil very easily. We're trading at 52 and change now, so we could easily make 54 in that market without too much trouble. But they're completing major patterns up in here, folks. So I don't believe that this is the time, to really, to get bullish on that one. That's what I see right now. I have to cover two things here. First of all, we got a break coming, but let me put this Apple thing in here because it showed where we were looking at support coming in Apple on a different way, and that's what's happened. And now we're getting ready for the bounce and get ready to sell that 154 share in Apple, folks. I think that's a Christmas gift. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. And what I would like to bring to your attention here is I posted the chart of the NASDAQ that we were talking about just a little while ago. We are at the proverbial moment of truth now, folks. We've just hit the 5908 level. That's the 61% retracement of the high from Sunday night. And then it also is a 382 retracement of the whole range, and it's also banging against where the old lows broke down from. Now, that's just technical analysis, and just a pattern that's there. But, take a look at it. Maybe if it stops for a while, it might offer a good trading opportunity. We have one other market that is really at the moment of truth, and that is the Treasury bonds. And we're going to switch to a 4-hour chart here in the Treasury bonds. That's right in the ballpark, 5909 to 5911. That thing's the pork bellies of the what do you call it? The stock indices. Believe me, you've got to give that a berth of at least 10 points. So we'll see. Anyway, let's take a look here at these Treasury bonds. As you can see here, we've had almost a perfect 382 retracement here over the last 5 days. The exact 382 level of the December Treasury bonds was 155.08. We got to 155.04. We've now sold off about 3/4 of a point. And if we get below the 154 level, that's going to pretty much signify that we're heading down towards the 150 level, would be my guess. But we had that 3 drive to a top pattern that came spot on September the 15th. And now we've had that 382 retracement, and it looks like to me that we are heading down to the 150 and change level. You'll notice that there's 2 significant bottoms, one during May, another one during July, and then one we've just had right here. It forms a really nice trend line. And if we get below 153.16, that pretty much tells us you're going to drop another 3 points down to that level. That means interest rates are going higher, not lower. That's the key to keeping an eye as we're looking at as these. Now we've had one of our listeners here, and one of our Tiger Den folks, have posted a chart in for the Euro futures, and you'll notice the difference between the Euro futures and the Euro foreign exchange market is quite a bit different. And the reason for that is the futures market at the CME is a contract. It's a legal binding contract. With foreign exchange, they're actually trading the spot money against the cash. There's a totally different types of markets. You have to remember that. One is a listed exchange. The other is a series of Forex banks. 13 of these banks supply the data that you get. That's why they give it to you free now, because they want you to do a lot of trading. 40 years ago, you had to pay for that data extra, and there weren't access to foreign exchange unless you had $1 million account, and then you could trade foreign exchange. It's always been big, but now it's in the trillions of dollars. It's just many times bigger than the stock market. So when you're seeing the discrepancy between the Euro futures and the euro cash, it is because of the fact that we're looking at a big difference in these things because of what I guess it's called carrying charges. That's the main thing that you want to be keeping an eye on. So that's pretty much what we're looking at. Anyway, that's my 2 cents worth, and we'll see what's going on, and we'll go from that level. Anyway, what we're going to try to do is we're going to try to get our good friend Dale Pinkert on later this. Maybe we'll have him on Friday if we can from California, because he knows foreign exchange quite a bit, and he was talking about a change in the dollar, of course, around the equinox, which that was a beautiful 78% level, and we had some nice cycle level at that level because it was also a new moon. Anyway, it's great to trade the euro futures if you're a larger or small trader. It'll handle 50 to 100 contracts without too much trouble, but the euro futures are much better to trade than the cash market for a smaller trader. And the reason for that is that you want to be able to you can see the bid and offer at the CME much easier, and believe me, they only charge, usually you can get $4 in and out trading, okay? And after that, what we have is in the cash market, they say that it's free, that you don't have to pay a commission, but you pay the spread. In other words, if the spread is 2 pips, which it usually is for most people in the euro, that $10 times 2 is $20. You're paying a $20 commission trading cash currency, and if you trade that same thing at the futures at the CME, you're only paying $4. Now let me figure this out. $4 is less than $20. Hey, that's a good deal, isn't it? If you did, 20 trades a month, you're saving a lot of bread. So keep that in mind. It's a good thing to trade, and that's the main thing to sort of keep an eye on. That's the bottom line of what we're watching here to see. We're trading at we did get up to 159. We got to 59.12 on the euro, and now we're trading at 55.05. So whether that's going to hold or not, I don't know, but that's a pretty interesting pattern to pay pretty good attention to, in my opinion, to watch it closely. We've had another market, folks, that is banging up against some really strong resistance, and that is this Japanese yen. We're trading at 112 and change up in here. We'll put this up here a little bit to take a look at it. You'll see that we had this equal rally, hit 113. We backed all the way off to 111.20 last night, and now we're trading at around 112.10 right now. So this is a really strong rally that came off of that 61% retracement, and any move above 113.20, that's 100 pips away in the yen, would really be a bullish sign, because you stop and think of the low from last August, the high we made in December. We made a perfect 61% retracement at 107, and we came out of here like a rocket. But the rocket stopped at the exact equal rally that we had during May and June, just like we had in August, September. So this market's heading down until we get above the 113.20, 113.30 level. That's the way it looks like from this area. So that's what I'm watching right here. So that's the main thing, to keep in mind, that this is what we're looking at. So watch two things really carefully. One has already happened, and that is the Treasury bonds stopped spot on, almost exactly at the 382 retracement at that 155.04 level, and it's broken a bit. And also we're watching the Treasury, well, that was the Treasury bonds. We're watching that S&P at the 25 handle, and the Nasdaq at the 120. The Nasdaq at 59.09. So if we get above 59.29, that pattern is broken, and you don't have to worry about it anymore. But right now, it's pretty much spot on what we thought it was going to do, and that's just my thoughts. And every pattern is nothing more than a pattern, and it has probabilities, and they are made to be broken. So keep in mind that this is what happens when you're doing these things as we're watching it. The crude oil's broken a little bit, so we're near a top in the crude oil, but it's not as clear as it is in the bonds and in the gold and the Japanese yen. So we'll take a little break here, and we'll come back and we'll review what we think is important for today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to bring you, give you an alert on one market that is appears to be breaking out to the upside. I'm not so sure that it is, because it's got quite a few ABCD patterns coming together. And if I can just find it here, it's got to be close, because here it is, and we'll be bringing up. This is our Christmas wheat, December. I want to bring it up here so you can take a quick look at it. This is something here is, you'll see it's making several ABCD patterns up in here. Our good friend Cy Monley, who was supposed to be on the show today. And guess what? Larry forgot. And I'll have Cy on next week. It's my fault. Anyway, you'll notice that there's some resistance here at 460 in the Christmas wheat. The beans have been coming down sharply, just like we thought that they were going to do, and they're coming into some support here at the 960 level basis January beans. So that's the main thing that that we're watching here. So keep an eye on that. That's something that is very, very important to be watching. We'll want to watch one other thing here. Let's just double check to see how we're doing here. If the NASDAQ gets above 59.12, folks, this pattern is flat out wrong. That's the only way you can look at it. We're trading at 58.98, so right now that number hit spot on pretty much. If we get much above, I would say 59.15 now, I would say this is probably wrong. But remember, the NASDAQ is like the pork bellies of the stock indices. It jumps around, faster than a slippery gecko in the middle of a rainstorm. Anyway, those are the things that we're watching for today. Keep in mind this euro has really strong support at the 117.60 level. We're trading at 117.92 right now, so we're 30 pips away. That's one that I would also keep an eye on, but that's basically it. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.